Hi everyone, and welcome to Alternative Disruptors. I'm your host, Tudor Scolca-Seușan. After the US has had a 20-year stretch of little to no electricity load growth, we're now shifting into an age where new investments are required to sustain the demands of hyperscale data centers. From gigawatt-scale campuses to design implications brought on by AI and new hardware roadmaps, the data center customer universe has expanded significantly. Joining me on our second episode of Alternative Disruptors is Tom Traugott, SVP of Emerging Technologies at EdgeCore Digital Infrastructure. Take a listen as Tom and I break down what 2026 has in store for US data centers and why this is a pivotal moment for the sector. Hi, Tom. Welcome to the show. Thank you so much for taking the time to do this.
Yeah, thanks so much for having me. Excited to have our conversation.
So as we kick off a new year, I wanted to start by asking you if you could please give us a brief look at what your role at EdgeCore is for our listeners.
Certainly. So EdgeCore Digital Infrastructure, we're a owner, operator, developer of data centers, primarily focusing on the AI and hyperscale market. We build single tenant buildings and campuses really in support, and we've really kind of turned a new page, particularly in support of the kind of gigascale campuses that are really highly desired today. I've been with EdgeCore since fairly early days, a few months in. We were founded in 2018. I'd say there's a version 1 of EdgeCore and a version 2 that we're now very much in. Version 1, I think we're with a lot of the M&A and we're really more of, I'd say, a powered land and sort of build-to-suit developer. Through COVID and kind of recognizing that we had land and power assets, we ran a process in 2022 to sell the business to have more vertically oriented capital. So we were really in a position where to put that power and land to use. So we ran a process, and at the end of it, Partners Group, global Swiss private equity, bought us primarily out of the America's Infrastructure Fund. And I think a couple of weeks later, November 22, ChatGPT launches. And in addition to the cloud demand that was well known, we had this whale of AI demand that really led us to revisit the strategy. So my role in the kind of first part of the business, I led leasing and sales. I kind of moved to a strategy, and now am here as SVP Emerging Technologies. Let's say that the only emerging technology we're focused on right now is AI, generative AI, and its implications. So, that's so keeping tabs on the customer trends, frankly, the new customer trends. We're in this AI hyperscale single tenant building universe that we play in. 5 years ago, there was probably only 3 to 4 customers that we target. Now that's easily 15 plus, and the more established, or frankly, if the customers become more legitimate because they've got a credit backstop from investment grade counterparty, they become real too. So it's a kind of brave new world, and we're in a position where we're building credibility in that universe. So again, I keep tabs on kind of the NVIDIA roadmap, but increasingly others like AMD and the like, to try and make sure we're building to the right form factors. We're understanding the rule sets that are evolving, and I guess through this conversation we'll get into more. I'll share more about what we've gleaned over the last couple of years.
Yeah, that sounds great. It sounds like you have a overview of what's been going on, and you've seen multiple levels of the business, so to speak. Yeah.
Come from, and for what it's worth, I come from the, right before EdgeCore, I was with AWS for 5 years in a new region expansion role. So kind of seeing the exportation of cloud around the world. And I do think what may be relevant for your broader global audience is, I think the rule set of AI are just being established now, and I think that's due for its similar sort of exportation.
Yeah, exactly. And like you said, there are new rules being set right now in the sector, and one of the things we've seen lately is that I mean, in last year, demand kind of ran into this power wall. Would you agree?
Very, very much so. Yeah, I think the industry has started to recognize that there's four dimensions that can slow down AI, and four walls, if you will. There's chips and data and networking throughput and power. And power is the lowest ceiling that we're encountering right now. So I think that the industry is really starting to move towards paying a lot of attention, to this power limitation that we're collectively facing.
Yeah. So are you seeing any indications that basically I want to know like what will this year entail for unlocking those new megawatts, so to speak?
Sure. Yeah, I think it's unlocking megawatts and it's unlocking gigawatts,
Oh yeah.
frankly, and it is which I've been in the industry for over 22 years now, and I couldn't have ever imagined that we'd be talking about a gigawatt on a
Oh yeah.
single site, if not multiple. The I think what it comes down to is that there's not an easy solution. It's really market dependent, that where the bottlenecks are. So I think the solutions will probably come in what I call all of the above approach. Whether it's generation, transmission, distribution, really it depends where you're at, or regulatory, bottlenecks. We're facing shortfalls. We're emerging out of a 20-year stretch, at least in the U.S., where we had low to no load growth. So I think a lot of utilities, and if you follow the money on this, became dividend focused, really a stable asset class that would throw off cash flow but didn't spend too much money. If anything, it found sort of your singles and doubles wins along the way. We're now shifting into an age where new investments really required. So, and I think that comes with consequences, for the grid. I think the industry, I think, is demonstrating a willingness to make investment, to support that. There is a challenge, though, of, a business that hasn't grown for 20 years really stops getting good at building new things, right? So and I think some of the economic incentives aren't set up for that. Publicly traded, highly regulated utility isn't necessarily thinking about, big CapEx investment and the return on investment for that, and business model for it. That's more of an opportunistic look. So, a lot of changes, but I think it's going to be across the board. The specific options, I think we could use more generation, we could use more transmission, we could use more distribution, we could use more potential on-site development that transitions and engages. We can use regulatory realignment that allows a utility to better utilize its grid resources, some stranded capacity, and grid flexibility, flexible loads, curtail. We're sitting on gigawatts of backup power, in the system, and we can help peak shave, and better utilize the grid. That means more revenues to the utilities. It also means potential offset for ratepayer increases, if we're using some of the headroom.
Right. So there needs to be more generation, but there also needs to be better ways to utilize the electricity that's already in the grid.
I think Duke University led a study earlier in the year. Tyler Norris has kind of gotten some earlier last year, some real attention spotlighting the fact that for 90% of the hours in the United States, we're only using probably 50 to 60% of that of the total capacity on average. And something as simple as curtailing 1% of the hours in a year could potentially unblock over 100 gigawatts of power. That's near term. So that's revenues to the grid. That's potentially also grid reliability in terms of establishing more of a backup. But and I think we're going to get there. I think the challenge is, we have either on-site generation where that could be firing up diesel generators and taking that load off the grid. It could also be long-term batteries. A lot of the events or the peak weather events, I think, are mainly in the 1.5 to 2.5 hour range. So, that's a pretty good, potentially a sweet spot for 4-hour batteries, given the technology today. But it also requires, the grid and its uptime. No doubt, it's a complex organism that we've created, and we expect 100, near 100% uptime through the year. That is, it looks like magic. You plug it in and turn the light switch on, but there's tremendous complexity. So I also acknowledge that. But there's also, I think, gearing up for this new normal where we're energy abundance, I think, is the goal.
That makes a lot of sense. You mentioned part of it, but we've also seen a lot of talk about these alternatives. Like you mentioned on-site generation, but we've also seen talk of like 24/7 carbon-free PPAs, long duration storage, peaking plants, and SMRs. Do you think any of these are more practicable than others? And can you help us separate them a bit from?
Certainly, I think it remains the case that certainly in the traditional hyperscale, and I think this will probably logically extend to the AI community as well. Having renewable sources, being able to demonstrate a sort of carbon neutral or net zero approach, I think it remains. I do think as a practical matter, it is the case that because of the intermittent aspect of renewables, you're still not really seeing directly electrons, solar or wind power data center. It is really in a grid mix. So I think the industry is still going to be, even if the incentives have moved away, like public sector, federal incentives have moved away from renewables, I think you're still going to see dollars from the private sector go there. But I'd say that that's more from an offsetting standpoint. So you'll see what's critical in this AI race is that we have baseload, right? And baseload can come from a fuel-based resource, whether that is nat gas or nuclear, geothermal, something that's continuous, or it could be a blend, right, with kind of your solar, wind, and nat gas and battery. But baseload's critical. Data centers, a generative AI training run for 90 days is effectively running, consistently. There's some intermittency within, but it's at the millisecond, microsecond sort of level. So, that needs continuous power, and that's figuring out, I think, how we fit together the simplest, near term actionable item. If you have in the United States, we have an abundance of natural gas. There's a lot of parts of the United States where we burn off, as a waste product for oil and gas exploration, excess nat gas that can't be captured. So we have an abundance of that. I think that's going to really power the next 5 years. And I think a lot of energy analysts kind of concur with that. That'll be the vast majority. We are pushing meaningfully, though, to whether it's SMR or even potentially a return of your gigawatt-scale nuclear, that we've lost, the muscle, if you will. We haven't been building those, but there's cause for optimism. I think the good thing about the U.S. is if there's money to be made, capital will follow or
Yeah.
start chasing that. So I'd say across that nuclear and SMR sector, um, I doubt that they're all going to pan out, but I
Yeah.
suspect that coming out of it, you'll have some natural, winners and losers. That and frankly, we've got bipartisan support. It's probably one of the most popular topics, in Washington, where rarely both parties get along. But I think on the topic of nuclear, we've really turned the tide there. Um, However, new and novel technology um, to truly, kind of reach production scale, I think we're easily into the 2030s, if not 2040, before that happens. So I think it's a lot of nat gas near term. Um, some real promise in probably the western region for geothermal.
Okay.
Some new innovation there, um, and and then I think there's optimizations at the grid level too. So
Yeah.
the uh, energy storage, long-term energy storage, helping with these buffers, tapping into that 30-40% of grid reserve capacity, making that usable near term, I think is also a major opportunity if we can get the coordination right. That's uh, it creates an obligation potentially and for curtailment or shifting grid load around, but I think it's that and on-site generation, nat gas are probably our most likely candidates in the near term, let's say under 3-year horizon, and then I think things start to open up as far as what else could be an opportunity.
Yeah, that makes sense. And so basically, in the long term, we'll probably, as time goes on, we'll probably see a blend of all of these, like you said. And I guess from what you're saying, the bottom line is everyone wants to get there. It's just how we'll get there. So
Correct. Yeah. And there is a relative simplicity. I think you're seeing most of the Stargate scale campuses are starting with nat gas fired plants.
mhm.
The simplicity of a large base load, that's located right here and a source of generation that's proximate to it makes a lot of sense. I think we could readily see these become grid assets over time. I think the integration of that and the complexity of the grid is no joke, as I mentioned.
Mm.
So we'll see how that integrates. But I think there's some. Um, I think part of the question is we've gone from uh, the size and scale of these workloads are such that I think there's still a lot of question. It's the AI bubble question. Is this
Yeah,
real?
exactly.
Is this are you going to consume what you say you're going to consume? And I think uh, it on the initial starts and the upfront, given some of the fear and uncertainty there, um, I think utilities again have not been in a position to sort of be more risk on in terms of their investments. So naturally, they're probably going to want to follow and see the pattern be established that, oh boy, these are gigawatt workloads and we know how
Mm.
how they operate, how stable they are, and then that has the potential really unblock significant additional investment, I'd say.
Yeah. Yeah, so basically, as these assets come online and they're starting to be integrated into the grid, I guess then we'll see basically where energy providers
Yeah.
how they'll react to this. And
Yeah, I'd say, we recognize that complexity and a data center owner operator, we'd prefer to not be in the utility business, right? I'd say generally. So
yeah,
but we're also facing, the business opportunity and frankly for the demand from our customers that says, you really need to get this going now, right? And if it's not you, it'll
yeah,
be someone else. And the economic um, opportunity is significant. We did at, let's say, a generic $3 per GPU per hour, metric, 100 megawatt data center. If you bring that online by a month sooner, that's an additional 100 million in revenue to the cloud provider. So that it creates all the opportunity or justification in the world to try and go faster, right? And that's a different time, different return, parameter than utilities are facing.
Yeah, there's a lot of money on the line for these big projects, and so taking all of these sort of into consideration, are we moving now into an era where we must redefine capacity in this AI-driven era?
Yeah, I think this goes back to the question of, the rule sets, right? I think cloud architectures have become pretty established. Most public cloud providers have at least 3 availability zone architectures, parent-child sort of rule sets to make it so that within each availability zone, many data centers could work together as one mega data center, right? So so we do have significant scale, those multiple data centers tethered together, we do have gigawatt scale, collectively. But AI does put some new pressure, create some new opportunity. The consistent common denominator is more compute, right? So each, we were mainly focused probably a year or two ago on the fact that for pre-training, the classical, hey, take a trillion parameter set and train it on X amount of 100,000 GPUs, and create a model. We knew that more compute, larger parameter, increasing all those, turning all those dials, made for better models. But what inference looks like, the application of those models. We've got 2 new scaling laws, if you will, what we call post-training and test time compute. So, basically indicating that sort of in that model, when it, here's a good example, a simple query for ChatGPT 18 months ago, if a 1-sentence prompt led to a 1,000 token answer, simple, right? So and not really tethered to the internet. It was based on the information it was trained on. Now the same prompt, sentence prompt, might lead to 100,000 tokens, because and you'll see it'll, that same answer, you may get 10 to 20 answers running in the background, also reinforcing, what you call reinforcement learning, training themselves and actually adjudicating what the right answer, fishing for more. So this explosion of data, the consistency there is, the answers get better with more compute. The longer it thinks or reasons before giving an answer, leads to more. So if we roll that up, more compute is more power, right? Jensen in an interview mentioned every gigawatt is worth about $35 to $40 billion to them in terms of their revenue. So, that correlation of compute to power, I think is a critical new rule set. How do you get to that, let's say, gigawatt? Can it be at a one campus is probably best. Can we adopt some of the networking technologies, these parent-child architectures we've used over time, to have a broader spread? Is that within a 10-kilometer radius? Is that within a 100-kilometer radius or a 1,000-kilometer radius? We kind of don't really know what the latency. I think that's evolving. We know there's latency at the rack. So the reason why the racks keep getting denser is because ultra low latency from chip to chip, so that the 72 GPUs, the NVL72 latest rack from NVIDIA, all those 72s are effectively connected together as one. So 1 mega GPU. And then all of those GPUs are connected to every other GPU in a data center. So scale up is within the rack, scale out is across the data center or campus, and then scale across is across a region, right? And there's some interesting technology. I think if you can get 800 gigabit sort of or terabit networks connecting campuses across a region, apparently the performance is getting there. So I think we're still facing a tremendous need for compute. How all of these network together is going to be what's evolving, but we do have some existing paradigms to pattern on. But I'd say that we don't fully know yet.
You mentioned this tremendous scale of like 5 gigawatts or something like that, whereas a few years ago we, like you said at the beginning, we weren't thinking of even 1 gigawatt. But I think we're gonna see scales like that eventually, and so for which power is obviously the main determinant there. But are there any other bottlenecks that you're paying attention to this year when building these new advanced facilities?
Yeah, I think we recognize that if you're building ground up these days, liquid cooling, or the ability to have direct-to-chip liquid cooling ends up being a baseline. There's still plenty of air-cooled infrastructure that's going to be out there, but I think being able to have having a central chilled water plant that fungibly connects to fan walls, air conditioning units, or CDUs that are distributing secondary fluid, that's a baseline. So, I think our 18 to 24 month, sort of time frame to, for long lead equipment for data centers is, still pretty consistent. That supply chain is generally scaled up, but probably the most important way you solve that bottleneck is by either investing capital early or, and or making decisions earlier, and we can, as a business or, whether it's EdgeCore or someone else, you can at risk spend money earlier, but then you're going to need a return on those dollars. You really have to make sure that those dollars are put to good work, good use. Our customer base, facing the constraints from a power standpoint, the forecasting for the hyperscale and AI market, tends to be on a 12 months or 12 months or less standpoint. Extending that forecasting out to make investment decisions, it helps dramatically, and I think that we've seen that as an industry for these large campuses. They're 15-20 year leases. So the long-term commitments. I think the challenge still remains in the medium term. A lot of tech firms making a decision that's a 2, 3, 4, 5 year out, sort of bet. And I think they're grappling with this uncertain trajectory themselves, right? I mean, cloud was growing at a consistent clip, and you can solve for that over time. But AI is a different trajectory and exponential, and it's slated to expand. As far as personnel, labor, it's really important to have. We have in-house operations. We contribute to the education of that staff, in the communities that we're in, which is critical. But I think we're facing, I heard somewhere, a shortfall of 500,000 electricians in the United States. So, when folks ask me, who have no connection to data centers or AI, how do I get involved? I generally say through the trades, right?
Yeah.
I mean, if you're handy and you can take the electrician path, I think direct-to-chip liquid cooling means we'll need plumbers in the data centers
Yeah.
increasingly as well. So I think those are, and there's a lot more building to be done.
Oh yeah.
So, that's now we've established a really strong partnership with Holder, and their ability to help us execute, on time, on budget has been tremendous. And that's, a testament to, there's a lot of complexity behind that, and to do it safely too.
Oh yeah, of course.
A job accident, costs money in addition to the, whether that's human life or harm, to a person and family. So doing, pulling all this forward and in the midst of all that complexity is challenging, but it's also critical to have good partners. And probably lastly, because it's come up a lot, being ahead of things on the community side. I think our industry spent a long time hiding in the shadows,
Oh yeah.
and when we could be
Yeah.
anonymous and we just looked like another warehouse, um, those days are gone. And I think um, some basics, that we're short of sponsoring a little league baseball team, but we're investing in the community. Yeah, like every other real estate, you cover the whole commercial property industry, right?
Yeah.
What do real estate investors and developers do? You have fixed assets in the community. People drive by, they work, live, play in proximity, and you have to be seen as a member of the community. Um, so we're making investments there, but also listening. Data centers are functional boxes. They can look like a lot of different things, and if we can enhance the aesthetics, that's also a big part. We've commissioned and hired a muralist from the city of Mesa. That's going to help us enhance the look and feel of our buildings there, and um, that's a fairly easy thing to do. $1 billion investment is, in the simplest box you can imagine that people drive by every day. So taking that into account and not cutting that corner, I think, is also critical to reducing what could be a bottleneck, which is community
Yeah.
opposition.
Yeah, and I think that will go. These sorts of initiatives will go a long
Yeah,
way because
yeah,
people want to know what's being
yeah,
built in their
yeah.
area and why.
Yeah.
Yeah.
For
And
what it's worth too, having worked on a number of projects in Europe and in Asia, I'd say in a lot of more constrained markets, you've seen that already. I mean, you've got, data centers that look like spaceships, in Paris, right? I mean,
yeah.
the aesthetics have been ratcheted up. So, that's really a place where the US could play catch up.
Oh yeah. Yeah. So you mentioned a bit earlier liquid cooling.
Mhm.
And so you're saying that liquid cooling and direct to chip or immersion even these
Mhm.
these will become a baseline now,
Yeah. Not immersion yet at
not immersion.
scale. I think but direct to chip where there's the secondary fluid that's running over the chip that's just more efficient at rejecting heat. I think that's pretty firmly on the NVIDIA roadmap, going forward. And um, we've kind of had some options for air to liquid, what kind of these sidecar builds using the cold air in the room to cool the fluid. It's pretty inefficient. It's I call that more of a band-aid than a permanent strategy. Um, it just ends up being foundational. We cross that threshold at um, probably 30 to 40 kilowatts a rack. The
Mhm.
current Blackwell series are 150, 160. I think Vera Rubin is slated to be well over 200.
Oh wow.
Um, Google, I think Google really was. famously sort of reticent, and they really didn't tell you about their data centers, but I think the industry knew that it was a strategic advantage, how they were operating. They've lifted the hood, I think, to recognize that this is a way that they can kind of defend their turf and demonstrate that they've got capabilities. But Google's been publicly doing liquid cooling for 7 years, I think unofficially 10, and they have megawatt racks, today that are in production. So that's, I'd say, on par, but by different metrics, like the TPU on a per chip basis is not quite as performant as NVIDIA's GPU one to one, but Google has densely packed those into a form factor, ahead of NVIDIA's roadmap, which I think doesn't see megawatt racks for another few years at least. So, it's a strategic advantage, in terms of being able to have ultra low latency connections within the chips that also enhances performance.
And just a bit of context for our listeners who might just be from the real estate world, but not necessarily from the data center world. Like these rack densities that you're talking about are basically what, 5, 6, 10 times more than the cloud computing densities?
Yeah, we're easily 10x above historical cloud densities, and great a tangible way of seeing this is a standard cloud rack, which was 10 to 15 kilowatts in that rack, was like 3 open burners on a grill, right? So fully, so you're needing to reject the heat, equivalent to a standard grill, with your cooling technology, and you could use air for that. At 150, or 200, you're 10 to 20 grills of heat, right? In a 7-foot tall form factor, and the thermal dynamics and complexity of rejecting that heat are critical. One thing to keep in mind, redundancy from a cooling standpoint increasingly is important. If the power goes out, we typically have a little bit of a restart moment. The chillers reset, the generators reset, and something that we have to do is consider thermal storage, what amounts to kind of some extra fluid like a battery, so that we have some run through as the chillers restart of basically chilled water. Because if the power restarts and turns on at that sort of heat, we are melting chips. Right? 10x, 10 to 20x a grill heat load, in that condensed location really starts to melt things. So the thermal runaway potential is greater than ever, and that could lead to spontaneous combustion at that type of heat. So so a lot of the complexity of design is around maintaining that investment, and if run without adequate cooling, you're absolutely at the place where you can start to melt things, if not the full building.
Yeah, that's actually crazy to think about, the amount of heat that gets generated there. And
insurance, I mean, it probably is a flow through of insurance adjusters. There have been data center fires, right? I mean, that's it is. We've got electricity and heat, and these are complex facilities that can be hazardous, right? So I think that the need to have professional operators to really have stringent protocols around the operations and maintenance at new scale that we haven't, scale and density we haven't seen before.
I know another thing that's on people's minds, especially when they hear about heat, and you talked about a bit about it before, is sustainability, which is another critical factor. Are there any baselines that you expect to see this year that were not baseline before? in this area?
I think the quantum of everything's gotten bigger, right? So the size of the offsets, the size of the mitigations are increasing, right? And even at, if we're looking at nat gas, fired infrastructure, is there a carbon capture, element I think is starting to be put on the table. But a new gigawatt of load in a market that has 40% fossil fuel fired capacity is going to need the 400 megawatts of offsets, right? Are there enough projects? There's a lot of projects that are shelved, right? So I think that it's going to create. Having spoken to some of the renewables developers over the last few years, off the shelf renewables offsets and projects have been widely available to the hyperscale community for years. They could, 6 to 12 months before opening a data center, kind of call around and find, I've got a 300 megawatt data center coming online. There's a 300 megawatt wind project over there. I can blend those together and kind of have my virtual PPA and mix. I think the shifting landscape for incentives means that those decisions are probably going to need to be made or seeded, backstopped earlier, if they want to still achieve that. So I think that's going to be, frankly, it's going to be harder and more expensive, right, to create that offset. I think there's also, just candidly, some more honesty entering the equation of what it means to have, 100% green power. It's not out of sight, right? To, have solar, 200 megawatts of solar, partially powering a data center, you'd need 1,000 acres of land adjacent to the data center. They don't live in the same place, right? So it is through the grid that we find that sort of blending and mix, and we have some grid resiliency questions, right? I think the Spain and Portugal, this inertia question of making sure that, for these intermittent loads, there's sufficient inertia to maintain the, grid reliability and resilience. There's I think a natural question right now of how much of the percentage of the grid mix, what is the ceiling of renewables? Data centers and private, operators like yourselves can invest in a, fully offset, sort of solution, but as a practical matter, 100%, solar electrons, that's not a technology we have yet, right? Unless you get much longer duration storage, you've got much higher efficiency, sources of green generation. So I think we're facing some, when baseload power, grid power was abundant, the grid mix question was easier. I think we're really into the practical realities of what we can do, and then what is it, what's more of a offsetting measure as opposed to a direct source. So I think we're getting into just some real practical questions, but in dollars will follow accordingly. That said, I think even though the shift in incentives, I think we're still going to see a tremendous amount of investment, from the hyperscale and AI community, still in renewables. If anything, it's probably going to mean that we're leading the pack, but more so than governmental incentives.
Oh yeah, there's a lot more still needs to happen, basically, on all fronts.
All the above. All the above is kind of what I remain a fan of right now, because I think that's what's going to be needed.
Yeah. So zooming out here as we're getting close to wrapping things up for this episode, I wanted to ask if you had to place like 3 bold bets for this year, for 2026,
Sure.
tech, geography, and policy, what would those be?
Um, because I'm more so on the side of, well, I'll lead with we don't know what we don't know on the AI front, but I'm optimistic. I think just in seeing the large language model innovation and capability in what amounts to a very short time, only a couple of years. I think AI will continue to impress. It will continue to be disruptive,
Mhm.
but it is challenging. It is, technology kind of looks like magic, in
Yes.
many ways. So, but I think we're going to see enough of that that's going to stem some of the AI concerns, right? And it's going to, I think, just continue to transform landscape. So, it, one bold bet, if you will, would be there's going to be an AI product that we didn't see coming, right?
Okay.
Some way of a model's application that was unanticipated and makes jaws drop, right?
Oh,
So,
well.
so just one, something we didn't see before. Um, I think in addition and on top of that, this power bottleneck, the power wall that we're talking about, I think the good thing about the U.S., we don't, in contrast to China, which does not have a power bottleneck right now, but they have a chips one. Um, Central planning government is able to say, I want more power, make more power. But they have the potential to have a lot of stranded power, right? To have stranded infrastructure that's not revenue generating. Good thing about the U.S. and many other, sort of traditional capitalist models is if there's a will, if there's a demand, supply will find a way, capital will find a way. Um, I do think, and we're starting to see it in the power sector. There's the privatization. So if the
Okay.
the current structure, if it's difficult for a utility that's publicly traded, that's highly regulated, to make longer term investments, to make the capex investments. Look at what happened to the data center sector. All the take privates, QTS, CyrusOne, you know, every, the data center providers got upside down. They were building more than the assets they have, which is a REIT no-no, right?
Mhm.
As far as being a steward of capital. So I think we may see Blackstone is acquiring a New Mexico utility. GIP of BlackRock is acquiring Allet, which is kind of a northern U.S., Minnesota and Wisconsin utility. And I think that's going to have more of a ROI focused, investment mindset that comes
Okay.
through that may shake things up. And we're joint ventures. There's capital that wants to enter the sector, and I think that utilities are the best place, for investing in energy, right? From a capability and structural standpoint, but I don't think they've had the economic incentive right. So that I think privatization may be looming large. If those are successful at all, I think you could see a wave. Um, and I think if we're looking at uh, some meaningful downward interest rate moves, which I think is likely in the current political environment. I think that
Hmm.
potentially leads to a surge of M&A and deal making, right?
Oh,
Because I
yeah.
think you've already seen some of that, right?
Yeah,
Some
yeah.
new records
Yeah,
set,
there's exactly.
but cost of capital, if that were to go down, starting from scratch takes a really long time. And I think there's a high likelihood that M&A for the capital, the flight to quality that's trying to get a piece of this, um, this boom, I think the boom continues, right? I don't think we're going to see this digestion period next year. I think it's just going to be actually stacking on top of with some new records. So I think that, if we get some interest rate, moves downward that are more meaningful over the next 6 months, boy, I think that, creates a lot of activities. The investment bankers are going to be busy.
Oh yeah, we're gonna see even more records broken.
Yeah.
Tom, thank you so much for this very insightful conversation into what 2026 has to bring for the sector.
Pleasure.
It's been a pleasure on my end as well.
All right. Thank you so much, Tudor.
Thanks.
Take care.
Thank you for listening to our second episode and to Tom's insights on the future of the data center sector. Join me next quarter on Alternative Disruptors when we'll check in on the current state of life science real estate here in the US. Besides that, we have a lot more content planned for 2026 here on CPE's YouTube channel, so make sure you're subscribed and have your notifications on to see it when it goes live. Until next time, take care.